ULTY and MSTY exploded onto the scene for a reason. Huge yields, constant buzz, and weekly or monthly payouts that got everyone talking. They're the kind of ETFs that immediately draw attention because they seem to do what most income investors dream of: provide regular, high cash flow without the long wait of quarterly or annual dividends. But now that the dust is settling a little, the real question is whether these ETF are still worth all the hype, or if the risks are catching up. ULTY is YieldMax's Ultra Option Income Strategy, ETF. The whole point of ULTY is to deliver massive weekly dividends through option-based strategies. It's not tied to a single company the way some of YieldMax's other funds are. Instead, it uses a basket of high volatility stocks and rotates exposures, selling options on them to capture premiums. Those premiums are then distributed out to shareholders as income, and that's what creates the huge yield everyone sees. The catch is that the fund itself warns investors that every time they pay out those dividends, the net asset value falls by the same amount. Do this week after week, and you start to see what people call NAV erosion. You're collecting a lot of income, but your capital base may shrink over time. That's the trade-off people are starting to notice. MSTY, on the other hand, is a YieldMax ETF tied to MicroStrategy, the company famous for its massive Bitcoin holdings. MSTY doesn't actually buy MicroStrategy stock. Instead, it uses derivatives and option strategies that track it, so the fund's performance is heavily tied to what happens with MSTR. When MicroStrategy's stock is volatile, the option premiums can be huge, which leads to big distributions. That's why MSTY has been able to put up a high monthly distribution rate in recent months. But just like with ULTY, a big part of those distributions are classified as return of capital. That means you're basically getting some of your own investment handed back to you along with the income. It feels good to get the cash, but it also means NAV erosion is happening underneath. This has been a big talking point lately. On forums, you'll see comments like, "NAV erosion on ULTY is killing me." And that's really the dilemma. You're making great weekly income, but the price per share may slowly drop. Investors then ask, am I really making money, or am I just recycling my own capital? YieldMax itself acknowledges this risk right on their website. They point out that distributions are expected to reduce, and frequent distributions may significantly erode the fund's asset value and trading price over time. So they're transparent about it. It's not a hidden risk. The problem is that hype has often overshadowed the reality. Still, YieldMax has made changes to try and reduce this issue. For ULTY, they've introduced dynamic strike selection on their options. They've also rotated into different high volatility names to keep premium income flowing without hurting NAV too much. Seeking Alpha even noted that these changes have helped stabilize performance while keeping yield above 80%. That's still a monster number, so on the one hand, erosion is a real risk. On the other hand, the adjustments show YieldMax is trying to make the strategy more sustainable. The big question is whether that's enough in the long run. With MSTY, the challenge is different. Because it's tied so closely to MicroStrategy, it inherits all the volatility of Bitcoin. When MSTR goes up, MSTY can shine and pay huge. But when MSTR takes a hit, MSTY gets dragged down too. And the distributions may still keep coming even as NAV falls. That's why you'll see its trailing yield jump, because distributions are massive compared to its current price. But again, much of it is return of capital. If you only look at the yield percentage, it looks incredible. If you dig deeper, you realize that you may be paying with your own capital base over time. This leads us back to the central question: are these ETFs still worth the hype? It really depends on your goals as an investor. If you're someone who values steady income above all else, then yes, ULTY and MSTY still deliver. Few ETF can pay you weekly or monthly at yields anywhere near these levels. If you like that consistency of cash flow, these funds are unmatched. They're almost like income machines. For certain investors, especially those who reinvest or who just need cash flow for expenses, they can make sense. But if your goal is long-term capital growth or even stable preservation of your original investment, then the story gets tricky. NAV erosion can eat away at your base. Over time, the value of your holdings may not keep up, even if distributions look great on the surface. Total return, the combination of income plus price appreciation, is what ultimately matters. And these ETF may struggle to deliver strong total return if NAV keeps slipping. In that case, the hype might be masking the reality. At the same time, we can't deny that ULTY and MSTY have tapped into what income-hungry investors want most. The demand is real. Billions have flowed into these ETF, showing that the market is hungry for yield even if the risks are clear. The hype itself has staying power because these funds deliver something tangible, weekly or monthly income, that investors actually feel. For many, that's worth the erosion risk. So, are they still worth the hype? If you know what you're getting into, then yes, they can be. They're not buy and forget funds. They require monitoring. They require risk tolerance. And they probably shouldn't make up the core of your portfolio if you care about capital preservation. But as income tools, they still stand out. That's why even with NAV erosion, even with return of capital concerns, they remain some of the most talked about ETF right now. At the end of the day, it comes down to your own priorities. Do you want income now or stability later? Are you comfortable watching share prices drift down while still collecting large checks? If so, ULTY and MSTY might be worth holding. If not, the hype may not align with your goals. Either way, they're not going away anytime soon. People love income, and YieldMax has figured out how to package it in a way that gets attention. So, what do you think? Are you still excited about ULTY and MSTY, or has the shine worn off? Let me know in the comments. If you enjoyed this breakdown, don't forget to subscribe to MoneyStick Unfiltered for more straight-to-the-point ETF discussions. Thanks for watching, and I'll see you in the next one.